Hello and welcome to Investing Confidential. Well, the big number came out today, and if obviously you've been listening to me, you know it's not a surprise. CPI was going to be higher, inevitable. There's a lot of inflation pressure. There's a lot of pressure on the Fed to cut, and I'm going to talk a little bit about stock sentiment, which is which should make you nervous. So let's jump into the CPI, the actual release. And as you can see here, I mean, again, this is what I'll go into specifics again, but we talked about crude rising. Everyone was raising the white flag or raising the red flag, whatever the kind of flag they're raising, saying, oh, inflation is defeated. Fed's going to cut. It's going to stop. They're going to cut. They're going to cut, whatever. And no one was paying attention to crude oil. No one was paying attention to beef. No one was paying attention to commodities going higher. Okay, higher. So it's inevitable what's going on. CPI is not going to go down anytime soon. Okay, the Saudis, the Venezuelans, the powers that be, they don't want the Russians, they don't want the oil to go down, and they control it. We do not control it anymore. Okay, and it's going to get worse because, as I told you, it's about the dollar. The dollar's been strong recently, but it's going to reverse. It's going to reverse. So here we have this release. Biggest part of the index was gasoline. Okay, biggest contributor. But there's a lot of mumbo jumbo in there. This BLS is a bunch of BS. They always try to smooth things over. They're always bullish. But now you look at the actual data, which they can't. They can talk a lot, but they can't mess with the data. Well, they do mess with the data, but let's look at the data. I mean, as positive as they are. Look at energy. Okay. Massive increase in energy prices. And by the way, this isn't stopping. Energy is not going down. So do you think September's number is going to be any better? No, absolutely not. And food is rising. Okay, everything's rising. And it's shocking to me that these talking heads continue to try to make this sort of a benign environment for inflation. It's not. Okay, let's look at crude specifically. Again, I've showed you this chart. Crude has broken out. It's broken out. Saudis are in control of crude. Russia's in control of crude, believe it or not. Then you've got natural gas, which is really what drives everything in terms of heating. And most people have switched over to natural gas. And look at natural gas spiking. You got a worker strike, and this is another component. All of labor in the U.S. is going on strike. They're demanding higher wages, which they should. Okay, the government caused this inflation with the massive spending, and they got to pay the piper. But that all means higher inflation and higher rates down the road. At least sticky inflation, right? And look at the demand for crude. It's higher now than the previous 7 or 8 years. Okay, so we've got the Saudis cutting, we've got higher demand, and boom, what do we got? A breakout in prices. And it's not just crude, as I told you. Look at cattle futures. Okay, ripping higher. What is that going to mean? Higher meat prices. What does that mean for everyone? Higher inflation, sticky inflation. Let's just say sticky inflation. And let's talk about what's really the real inflation, what's affecting all of us, all right? Not just the CPI, which is a manipulated index. Okay, here's inflation on some key items, cumulative from 2019. All right. So when we had no inflation in 2019, when in the pandemic and Biden and all this, and now we have and the massive spending. Okay, wages since that time are only up 20%. Everything else is higher: food, fuel, vehicles, transportation. The government folks don't care. Okay, because they keep coming out with manipulated indexes like the CPI. They don't care. They don't care about you. They don't care about me. They don't care about anybody. Okay, and let's look at the New York Fed comes out with inflation expectations. It's kind of a joke, but as you can see here, Powell's got a 2% target. They don't have 2%. They're not 2% target. It's sticky. Even their minds is sticky. Okay, and let's see with now the perception, right? What's the perception of our foreign partners? Or our foreigners who literally are financing this craziness, this debt-fueled, crazy spending that we have here in the US. Here's a recent 3-year bond auction. Folks, this failed, okay? When I say failed, I mean that they wanted a certain level, they didn't get it, and it had to be. So what this says, that investors are demanding higher rates from the U.S., meaning the U.S. is no longer considered guaranteed. So these auctions are going high, and this is contributing, as we spoke about before, to the massive increase in interest costs for the U.S. Yields are spiking, highest since 2007, as you can see here. Yet, is another thing, again, no one's talking about. Here you see corporates, companies. They're issuing bonds like never before. They're going crazy. Now, if rates are going lower, which is what Wall Street and White House is telling you, US government, why would you issue bonds like crazy? Right? If you believe in Wall Street and the government, you'd sit back and say, oh, I'll issue bonds when the rates are lower. No. The companies, they're acting independent. They see what's going on. They issue bonds because they believe rates are going to be higher for longer. They know it. They see the inflation. The government is just clueless. Wall Street is clueless. And then you go back to the economy. But folks, the U.S. economy sucks, plain and simple. I mean, here, luxury goods, taking a big hit. Look at luxury furniture, right? Supposedly, anything with luxury is impervious to the economy. They're suffering. Why are they suffering? There's no demand. The housing market stinks. You cannot have a booming economy or even a stable economy when your housing market stinks. And then you've got this moron, Janet Yellen, and she is a moron, by the way. She feels good about a soft landing. I mean, this is a joke, folks. Everything I've showed you said there is no soft landing coming. Okay, and this is the biggest joke of all. Here we have the New York Fed versus the Atlanta Fed and their expectations for GDP. I mean, you can't make this shit up. Excuse my French. Then if you throw in the St. Louis Fed is pointing towards no growth or recession in the third quarter. So you've got the Atlanta Fed out of their minds saying almost 5% growth. You got the New York Fed, tepid growth. Then you got the St. Louis Fed saying we're going into recession. I mean, this is insanity. Okay, this is absolute insanity. And now you've got here household media and the results of all this insanity, and why there is not going to be a soft landing. Here you have household medium income. It just dropped like a stone, folks, as you can see, like a stone. And you've got it's the biggest drop since 2010. And then the income's dropping, and then you've got credit card balances exploding, as you can see here, almost 1.3 trillion. Now, point out, the government again tries to manipulate this data and says, oh, we have to adjust it for inflation. No. This kind of data you don't adjust for inflation. These are, again, you adjust things for inflation when you have currency issues and that type of thing. But here you have real people borrowing money at an average 25%, which is they're borrowing money in dollars, earning money in dollars. So you don't have to adjust it. There's no adjustments needed for this. And it's exploding. 1.3 trillion. You can't get out of that. It's a spiral. It's a trap. Okay? These are real interest payments. And now, at the worst possible time, the banks are reducing the credit. I don't blame them, but it's the worst time going into a recession and they reduce credit. They must see something that the US government and Wall Street don't. And again, you can't get away from this data. Here's small business small businesses, folks, as I told you, generate the most jobs. They're the engine of the economy. And their optimism is falling off a cliff, lower since 2016. So why is this market not crashing? Well, look, you can see it right here. Investors are actually getting bullish again. It makes no sense. Why are they getting bullish? Because there's this great hope for a rate cut. They think the Fed's going to pivot, and when you look at the CPI number, you know that they're not going to pivot. They're not going to do a rate cut anytime soon. The earliest expectation is, you know, end of first quarter, second quarter 2020, but that's not going to happen. It's not going to happen. And let's finally look, we looked about equities here. Let's talk about the stock market. Here is a classic indicator that equities are in a danger zone. You got earnings yield. By the way, earnings yield is the inverse of the PE. So you got the earnings yield minus short-term treasuries. Now, you always want this to stay in positive territory. That means you're in good condition. The higher, the better. Means cheap stocks. But now you've got the first negative, revision of this since the dot-com crash. This is a flashing sell signal, folks. Investors are not paying attention to. They just keep buying. So the positioning is too bullish. All right, but let's not end with all bad news. From an investing perspective, if you're looking for cheap, if you want to buy stocks, even for cheap stocks, you got to look at U.S. small caps as well as emerging markets. Now, I'm going to talk about emerging markets in a couple of days because I'm actually in Mexico today. But take a look at this U.S. small caps. They're the cheapest they've been relative to the large market since 2000. Right? That's where you're going to find your bargains, in U.S. small caps. So inflation continues at a high rate. Rates are not going down. They'll continue to hamper the economy. Even the U.S. Fed, the government, is completely confused. They don't even know where the economy is going. Most likely it's going into recession, or it is in recession, I've been saying. So if you're an investor, be very careful out there.